So I thought I'd do a video on the kind of like the disruption in the investment and financial space that's been going on for a little time now. And, you know, yeah, we're having more and more companies like this, which I put in $1,000 for. Republic, if you don't know, is it's kind of like a Kickstarter, but like Kickstarter, you put your money in and with the hope of getting a finished product in the end, where, on Republic, you're investing in these companies that are startup just in a crowd-funded sense instead of, how venture capital is normally done. And the goal of this is obviously for the company to eventually have an exit so that your investment either becomes common shares or cash, depending on how the company decides to do it. Or you just get common shares at the time of making. But this represents such an interesting part of like how investing is becoming so much more like democratized. And additionally, you have like not just the investing side, but like the banking side. You have things like BlockFi, which I have an account with, where they're loaning out money on the blockchain, and they can do it anywhere, basically instantly. It's and for giving them your money in an interest account, you get these ridiculous rates of return. Stable coins are 8.6%. You can get really low APR loans backed by the crypto you have in the account, or the Bitcoin is 6% APY, and Ethereum's 5.5, 5.25, and they have this credit card here that you get Bitcoin back on every purchase of 1.5%, which is not bad by any means. And if you have it, you get you get more, annual year earnings on your stable coins, and on any trade you get additional Bitcoin. It's the democratization of like cryptocurrency, and like these like things like Republic. It's unbelievable. And like, yeah, BlockFi, this company, just did their Series D. They raised $350 million. They had an evaluation of $3 billion. It's unbelievable. Yeah, I have $1,000 here, in Linen at a 2.2 million dollar valuation cap. Even if it reaches a tenth of what BlockFi is at in a couple years, which who knows how likely that is, but even if a tenth, that's still a 10x return on this. It's ridiculous. It's so insane. And then yeah, I mean, it's not just like crypto they have on here. Like I put $500 in this, which is literally a venture capital firm. And this one it does it different. They just give you a security. And then we have like just in more like just straight up like DeFi, we have the like ETH2 coming fully online, where the mainnet will be like fully online, and it'll be proof of stake, which you don't know how block chains work and cryptocurrencies work. Like historically they were all proof of work. So you run a program like these guys here. See if I can run without crashing my recording things. And it'll mine out, it'll mine just using up your graphics cards, resources to solve the math problems of creating new blocks on the blockchain, and you get a little bit of money for it. I'd mostly do Ethereum. Like I run it while I'm at work. This isn't actually accurate. is just because it's been down so long that the average is ridiculously low, because I wasn't using it very much. I also started mining here on Raven coin just to see what happens. Might do it a little bit. I mean, Raven coin's not worth that much, so I mean, you got $1.14, so, but it's just it's so incredible. The future, if you're investing your money, is an incredible thing. It's it really can't be. I mean, I guess it can be overstated, but it is pretty damn incredible what the future holds, and the lack of government control over the money supply will definitely. Oh shit, I just fucked up my contact. Will definitely change things. But yeah, no, I did it there because I just fucking popped my contact on my eye. Ooh, no, it's back in. Yeah. So I realized I didn't actually explain what what this whole thing means. So it's going proof of stake instead of proof of work. Proof of stake is you put down, it's set at 30. If you want to hold your own node for staking, it's 32 Ethereum, which they probably said somewhere. But it's 32 Ethereum, which is quite a bit of money. I mean, it's 1,600 times 32. I don't feel like doing that math. 48,000, something like that. Sound right? I don't know. It's like 48,000. That's quite a bit of money for most people. But you can do it in pools like a Rocket pool here. This isn't online yet, but you can stake a much smaller amount, and the point of staking, you validate any transaction on the blockchain, and you get back a percentage which is variable depending on the total amount of Ethereum staked at any one time. You get variable amounts of Ethereum back, which I'm interested in. It has a lot more risk than I would say like BlockFi does, and BlockFi already gives 5.25% on Ethereum, so it's like we'll wait and see how things end up, like what percentage you're gonna end up getting, but it's certainly interesting to say the least, and it's significantly more power efficient, which is a big criticism a lot of people have of cryptocurrency, is how power inefficient it is. And this is like doing things like this is going to make a significant change for that. I mean, Bitcoin won't have that, but you could see a very different, path forward here, where Ethereum could become more of the typical use case for cryptocurrency, because you have things like smart contracts on there too, where once the gas fees get down on Ethereum, and it's significantly cheaper to utilize Ethereum, because right now it's ridiculous. It's so unusable right now because of how the gas prices are what it costs to make a transaction happen, and it's variable based off of the basically how crowded the network is at any one time, and it's just crazy expensive to make transactions right now. But this will hopefully solve a lot of those problems, and we have, like, before the whole mainnet gets taken over by ETH2, you have what is it? EIP 1552. Beep 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 beep. Am I right? Why is nothing else coming up? Yeah. EIP 1559 is what it is. Okay. Will basically it cuts the profits of miners down by, I believe now the projections are it's going to be around like 35% or something like that. And the goal of that is to stabilize the prices of the gas fees. and they're doing so in a way that's concerning to me. I'm sure the way that they're doing it is, makes sense. They see more the back end than I do. I have very limited understanding of cryptocurrencies and Ethereum specifically. But basically they're burning that fee, that difference in fee, and it's not being given out as a reward to the miners anymore, which is interesting because what that does is it means that at least it's partly deflationary. Deflation is when the supply of the currency actually goes down, which isn't actually a good thing. You would think it might be because the price would rise because, lower supply means higher price, controlling for demand. But the problem is that if you deflate too much, then there gets a liquidity crunch. And if there's not enough liquidity, then there can be massive spikes and drops in pricing and it becomes really unstable. So it's a little worrying. But I'm sure that, in the end, that the new Ethereum being mined or whatever is going to be higher than the fees being burned. I'm sure, right? It's got to be. They wouldn't do it they wouldn't do it if that wasn't the case. That wouldn't make any sense. Yeah, very, very, very interesting. So, the future is bright if you can tolerate some risk. The future is a very bright one.